All right, so I wanted to talk about a company which I found very recently, actually, and it's a cosmetics company named E.L.F Beauty with the ticket price E.L.F. This is a company I actually found because my brother mentioned it, and I've taken a look at it. And what I saw is a good opportunity to make some great trades. As you can see, the price has been rising up. It hit a top on March 2024. Then it came back down. Then it came back up on June. And then it started crashing down until it ended here in September. The price has been stable. It hasn't went any lower. And I think this is a support level and the price will not go lower than this. Because as we can see, it has been hanging around here for days now. And this has some history, right? So this support level right here is actually this old resistance level, and it actually comes back to here. As you can see, the price has also consolidated here. Then he had double tops. Then he's consolidating again. And if we take a look at the pivot points, which I usually use too, we can see that the price is at the pivot point right here. And it has been holding up above the pivot point. It has a tendency to go above, which I see as something bullish, right? So right now I have two bullish signals, but there's more than that. Let me see the RSI, both the normal and the stochastic. So the normal is on the oversold area, which tells me that people have been selling this stock. They're getting tired of selling this and they want to start buying back up again. Not only that, but the RSI line has crossed the signal line right here, which I see as bullish. Now, the problem comes with the stochastic one, because the stochastic has been going up while the other one is going down and the price is going down. So, what happens? This is a divergence and it can be a red flag, right? So, as we can see here, the price has been stable. However, the stochastic has been rising to the overbought area. What can this tell me? Well, for me, it's a bit scary because it means that the price can actually go lower, and I mean the price can always go lower, right? The company can be worth €1 per share, for example. But why do I think this is? I wouldn't say meaningless, but not too worrisome because if you take a look at historical data, right? And remember, looking at the past doesn't allow us to predict the future, but it can give some glimpse, right? We can see that the price follows along with the normal RSI way more than it follows the stochastic one. So there are a lot of moves here that the stochastic doesn't catch, is not able to catch, and this means that in some stocks this happens. So in some stocks, the stochastic simply gives false signals or is kind of muddled and we can't quite see. So sometimes it's not that useful. If we take a look at the weekly chart, which I always do, we have a lot more bullish sentiment. So we can see there has been a fall, and now both of them are in the oversold area. I mean, the normal RSI is not in the oversold, but it's almost there. And if you take a look, it has never been there, right? You see, it never crosses the line on this particular company, which is okay, it's fine. But I think it will soon cross and soon start going up. So we have now a lot more indicators. Not only that, but if you take a look at the MACD, we can see that, well, it has gone a long period of fall, and now there is a bit of a reverse. The MACD line has crossed the signal line, which is good indicator of a reversal. Histogram has turned green and is now going back up, but this is an indicator which I see as good, is not the best because if we take a look at the past, histogram has not been that helpful. But the MACD line has been a lot more helpful. So there's a cross and a rise, cross and a rise. So look what happened, another cross right here. So the time is now. We are going to see some move from this company in the near future and some great moves because if you take a look, if the price goes back to this previous support slash resistance line, we're taking a look at some 40% profit. But if the price eventually goes back to the old tops, it's 100% upside. So this can be an amazing trade if everything goes well, right? So we have to remind ourselves that the economic situation is not the best, and beauty products are always affected by this because they are expensive. Now, E.L.F is good because they sell cheaper beauty products, so they are one of the brands that I think will steal the business from other brands, right? And not only that, they do a lot of sales online, which means they have less costs with the shops and they can make more profit. And let's take a look at that. So it's always important to also check the fundamentals, not only the technicals. And what do I see when I look at this? First bullish sign. Most of its shares are free float, which I see as a bigger guarantor of transparency and accountability to the management, to its shareholders, right? When a lot of the company are closely held shares, it gives me a little bit of a nick, you know. I like companies that are mostly public and mostly transparent. Now, the PE ratio, not the best. 88, I would say it's too high. I have to confess that I haven't taken a look at other beauty products, which I will do in the future, because, well, we have to see the PE ratio inside the competition of this company and not with other companies, right? Now, more things. Their net margin is awesome, 12%. I would say it's pretty great. Another good thing that I see is that the cost of goods sold is pretty low compared to the overall business structure, and the operation expenses are higher. But I mean, the operation expenses are an area which can be more easily cut than the cost of goods sold because you have to produce the goods. So the cost of goods sold will not go anywhere unless you revolutionize the way you're producing those goods, right? Another bullish signal is that they have always went through with their market estimates. So in everything, both in revenue and earnings. Now, the scary part, it's the debt. As we can see, the interest rates, well, they have been cut right now, which is good for them, but they are still quite high. Um, we don't know the maturity of these debts, and we see that they took a huge hit from 2022 to 2023. Let's take a look. It was on Q3 2023. And well, I always like to see this as a story. And it's in the statements that we can see the story coming up. So, Q3 2023, there was a lot of cash coming in from financing activities, aka they are taking in debt, and then they invested it in. So we have minus 279 million on investments. So they took that to invest in their own business because let's remind ourselves this is a growing company. This is a bold move, I would say, because in the current economic situation, taking on debt to expand your business is risky, but it shows confidence in yourself, right? They wouldn't do this if they wouldn't be confident. So this makes me bullish because it's not like they're not making profit and they had to take on debt to keep their business afloat. No, no. They took on debt to expand their business because they invested it. We can see it right here. So, and After that, they never took that again. So I think it's pretty bullish right now, right? And taking a look at the price, I would say it will not go lower than this. Probably not. At least not in the near future. So I think right now is the time to buy this company. Is the time to hold it. I bought it. I bought it on a couple days ago. I don't quite remember the day exactly, but my medium is hanging around here yet, and I think the price will go up, and I'm pretty bullish. And I think you should take a look at it too. Don't take my word for granted. Make your own investigation, but I think this will have a lot of upside, right? I'm hoping that it gets to the 100% profit, right? That would be amazing.